The truth about making $2,000 per month trading. Imagine waking up every morning knowing that your trading account could potentially generate an extra $2,000 per month. For many people, that amount could help pay rent, cover bills, build savings, or even create financial freedom. That's why one of the most common questions beginners ask is, how can I make $2,000 per month trading? But before you get excited, there's something important you need to understand. Making $2,000 per month trading is possible for some traders, but it is not easy, and it is certainly not guaranteed. In this video, we're going to break down the reality behind this goal, the math involved, the mistakes beginners make, and the mindset needed to pursue trading responsibly. Let's begin. Chapter 1. The Dream of Making $2,000 per Month. Why do so many people focus on the $2,000 number? Because it feels achievable. It's not $1 million. It's not a luxury lifestyle. For many people, $2,000 per month could make a meaningful difference. Social media has also contributed to this dream. Every day, traders see screenshots of profits, luxury lifestyles, and stories of overnight success. But what most people don't see are the years of learning, the losing trades, and the accounts that were blown before success arrived. Many beginners believe that if they learn one strategy, profits will come quickly. Unfortunately, trading doesn't work that way. The market doesn't reward hope. The market rewards skill, discipline, patience, and risk management. One of the biggest mistakes traders make is focusing only on income goals. When your only goal is making money, emotions become stronger. You become impatient. You force trades. You take unnecessary risks. And often that leads to losses. Instead of asking, how can I make $2,000 per month? A better question is, how can I become a consistently profitable trader? Because consistency comes first, income comes second. Chapter 2. Trading is a probability game. One of the biggest misunderstandings about trading is believing it works like a regular job. At a normal job, you receive a paycheck. You know how much you will earn. Trading is completely different. Trading operates on probabilities. Even the best traders lose trades. Even the best traders have losing weeks and losing months. There is no fixed salary. There are no guarantees. Professional traders understand this. They don't focus on individual trades. They focus on executing their edge over hundreds of trades. Think of a casino. A casino doesn't care about winning or losing one customer. It cares about the long-term probabilities. Successful traders think the same way. They know that one trade means very little. What matters is the overall performance over time. This mindset helps reduce emotional decision-making. Instead of chasing profits every day, focus on making good decisions consistently. Chapter 3. The Math Behind $2,000 per month. Now let's talk about the numbers. Many beginners underestimate how difficult it is to generate consistent monthly income from trading. Let's look at some examples. If you have a $5,000 trading account and want to make $2,000 per month, you need a 40% monthly return. That's extremely difficult and very risky. If you have a $10,000 account, you need a 20% monthly return. Still very challenging. With a $20,000 account, you need 10% per month. That's more realistic, but still difficult to achieve consistently. With a $50,000 account, you only need 4% per month. And with a $100,000 account, you only need 2% per month. Notice something important. The larger the account, the smaller the percentage return required. This is why account size matters. Many beginners try to turn small accounts into large incomes very quickly. To do that, they often take excessive risks, and excessive risk usually leads to excessive losses. The lesson here is simple: focus on building skills first, then grow your account responsibly. Chapter 4. Why most beginners fail. Let's discuss why most traders never reach their financial goals. The first reason is overtrading. Many beginners believe more trades equal more profits. In reality, more trades often mean more mistakes. Professional traders wait patiently for high-quality opportunities. The second reason is revenge trading. After a loss, emotions take over. A trader becomes angry and immediately enters another position to recover money. This usually creates even bigger losses. The third reason is risking too much. Some beginners risk 10%, 20%, or even 50% of their account on one trade. One mistake can destroy months of progress. The fourth reason is chasing profits. When traders become obsessed with money, they ignore their rules, they enter poor setups, they abandon their plan, and eventually they pay the price. Success in trading is not about finding more trades, it's about making better decisions. Chapter 5. The Power of Risk Management. If there is one skill that separates successful traders from unsuccessful traders, it is risk management. Most beginners focus on how much they can make. Professionals focus on how much they can lose. Before entering a trade, they already know their maximum risk. A common guideline used by many traders is the 1% rule. This means risking no more than 1% of your account on a single trade. For example, if you have a $10,000 account, a 1% risk means losing no more than $100 if the trade goes wrong. This approach may seem slow, but remember, trading is not about getting rich quickly. It's about staying in the game long enough to develop skill and consistency. Risk management protects you from emotional decision-making. It prevents one bad trade from destroying your account, and most importantly, it gives you the opportunity to trade another day. Professional traders understand a simple truth. Protecting capital comes before growing capital. Without capital, there is no trading. Chapter 6. Building Consistency. Consistency is what turns trading from a hobby into a profession. Many traders experience a few lucky wins and believe they have mastered the market. Then reality arrives, losses happen, the market changes, and suddenly confidence disappears. Real consistency comes from having a structured process. This starts with a trading plan. Your plan should define when you enter a trade, when you exit a trade, how much you risk, and under what conditions you avoid trading. Another powerful tool is a trading journal. After every trade, write down why you entered, how you felt, what happened, and what you learned. Over time, patterns begin to appear. You will discover your strengths. You will discover your weaknesses, and most importantly, you will learn how to improve. Successful traders don't simply trade, they review, they analyze, and they continuously refine their process. Chapter 7. The Compound Effect. Many beginners underestimate the power of small improvements. They want massive gains immediately. But wealth is often built through consistency, not speed. Imagine earning a modest return month after month. At first, the progress may seem slow, but as your account grows, each percentage gain becomes more valuable. This is known as compounding. Compounding allows growth to build upon previous growth. Think of it like planting a tree. In the beginning, growth is barely noticeable, but over time, the tree becomes larger and stronger. Trading works the same way. Small gains combined with disciplined risk management can produce significant results over the long term. That's why professional traders focus on percentages rather than dollar amounts. The percentage reflects skill, the dollars come later. Chapter 8. Realistic Expectations. One of the biggest dangers in trading is unrealistic expectations. Many people enter the market expecting quick profits. They believe they can quit their job within a few months. They believe every trade should be a winner. Unfortunately, these expectations often lead to disappointment. The reality is that trading is a skill. Just like learning a language, playing an instrument, or becoming a doctor, it takes time. There will be mistakes, there will be setbacks. There will be periods where progress feels slow, and that's normal. Successful traders understand that growth happens gradually. Instead of asking how fast they can make money, they ask how much they can learn. The traders who survive are usually the ones who remain patient, because patience allows experience to develop, and experience is one of the most valuable assets in trading. Chapter 9. Professional Trader Mindset. What separates professional traders from gamblers? The answer is mindset. Gamblers focus on excitement. Professional traders focus on process. Gamblers chase big wins. Professional traders manage risk. Gamblers react emotionally. Professional traders follow rules. A professional trader understands that success comes from executing a proven process repeatedly. They know that one trade does not define them. One day does not define them. 1 month does not define them. Instead, they focus on long-term performance. They remain calm during wins. They remain calm during losses. And they understand that discipline is often more important than intelligence. The market rewards consistency, not excitement, not predictions, not luck, consistency. Chapter 10, Your Roadmap to the First $2,000 Month. So how do you realistically work toward your first $2,000 trading month? Step 1. Learn the fundamentals. Understand market structure. Understand risk management. Understand trading psychology. Step 2. Practice using a demo account. Build experience without risking real money. Develop confidence in your strategy. Step 3. Focus on risk management. Protect your account at all costs. Survival comes before growth. Step 4. Build consistency. Follow your trading plan. Keep a journal. Review your performance regularly. Step 5. Scale gradually. As your skills improve and your account grows, increase your position size responsibly. Avoid shortcuts. Avoid unrealistic expectations. And avoid comparing yourself to traders on social media. Your journey is unique. Your goal should not be to become rich overnight. Your goal should be to become consistently profitable. Final thoughts. Can you make $2,000 per month trading? For some traders, yes, but it doesn't happen through luck. It doesn't happen through gambling. And it doesn't happen overnight. It happens through education. It happens through discipline. It happens through risk management. And most importantly, it happens through consistency. Remember this. The traders who focus only on money often lose it. The traders who focus on skill eventually earn it. So instead of asking, how can I make $2,000 next month? Ask yourself, how can I become a better trader today? Because when you focus on becoming a better trader, the results have a way of following. Thank you for watching, and if you found this video valuable, don't forget to like, subscribe, and continue your journey toward becoming a disciplined and responsible trader.